And good afternoon, everyone. It is March 29th, Tuesday, March 29th. This month is almost over. As always, the markets are open, so we are here to analyze the markets, tell you what's going on in the news, earnings reports, and of course, we're going to go over our market skyline and also commodities and go over everything. And then we're always going to finish out on Tuesdays when I'm here. We're going to finish up with a round of Queen's Court. So I'm excited to be here today. Matt, how are you doing this afternoon? Oh, it's still morning. It's afternoon.
Yeah, you keep saying afternoon. I'm like, it is not afternoon. I'm still drinking coffee and tea and waking up. No, I'm doing absolutely fantastic. And I've been away from the community for the last few days, and I'm excited to be back. I honestly, I love the halftime report, and I hate when I can't be on the halftime report. So I'm excited to be back and break down some improving market conditions as we've. I don't even know if we're, I've been calling it tracking the reversal. I don't even know if we're tracking the reversal anymore. This looks like a short-term bullish uptrend to me. So it's going to be exciting to break that down.
It seems like that's a discussion every Tuesday we are on. So let's just keep that conversation going. How about that? Tell me what you are seeing in the S&P. Let's go over all the different indexes here and tell me what you're seeing.
Yeah, obviously an improving technical condition here, and that's something we've been talking about in recent history is, you're tracking the double bottom, the breaking up against every resistance level. And then over the last week or so, this high base, what we've talked about all last week, the little bit of consolidation here without that downward movement in price, showing a little bit of defense, even on a day like last Thursday or last Wednesday, when you saw that downward movement in price, got gobbled up pretty aggressively the following day, and then you're breaking out there. And so you're looking at a short-term bullish uptrend against a intermediate neutral trend. And as you can see, intermediate wise, if you want to look out to a little bit longer time frame, you see a couple different choppy sessions, obviously downward movement in price, downward pressure, downward trend, followed by an upward trend, downward trend, followed by an upward trend. So you're really neutral when you're looking at the intermediate trend, but that short-term trend, which is the momentum of the market right now, that's certainly the bulls have a little bit of control. I would say we're slightly overextended here, though, and I know we're only punching up 3-4 days against that high base, but that high base never really had time to really allow a consolidation from a overextended perspective. So I would say you're slightly overextended. And so it wouldn't surprise me to see some consolidation in the market, maybe even come down and retest some of these moving averages that are now crossing back up. Look at that 9 EMA. This market looks like it wants to hug the 9 for a little bit. So keep an eye on that 9 EMA. We've seen that 9 EMA in good times. Look at it right here off that reversal, stayed above the 9 EMA for an extended period of time. We're now above the 9 EMA. And so I do expect the 9 EMA to play a role in the momentum of the market. But right now, you are looking at a market that's slightly overextended. And just to give you an example of it, take a look at the juggernaut that is Apple here, coming off that double bottom around the 200-day moving average. You've been punching up for a good little bit more than 2 weeks now. Now you're coming into major resistance levels. And so when your juggernauts out there are a little bit overextended, punching into a little bit of resistance, and you take a look at some of the other juggernauts out there, Facebook, a little bit overextended. Look at the RSI coming into that very important 50 period moving average. You look at, and again, I'm just going through some of the big dog, the carries, right? The broad shoulders, if you will, like the picture on Amazon, especially after a little bit of consolidation recently, punching up against the 200 yesterday. You got to like that, but you also got to look at an RSI that's currently at right around 87. And so you look at your big dogs out there, and it's a pretty decent trading environment for the bulls, but just a slightly overextended. But you know what? After everything we've been having to cover over the last 3 months in the market, I'll take an overextended situation any day of the week.
I agree with you on that. Speaking of, stocks, and we'll get to stocks in the news, but I forgot to mention that in the beginning. We do have some stocks that are in the news, obviously, with earnings and Tesla and Robinhood. We'll get to that later, but just wanted to put that out there that we're going to be discussing those companies here in just a second here when we're done with the skyline. Let's take a look at the other markets here and tell me what you're seeing in the Dow Jones, NASDAQ, and good old Russell.
Yeah, Dow Jones here. Nice consolidation and obviously choppy last two sessions. Look at the wickety wick nonsense. Nobody loves wickety wick nonsense. It gives a little bit of indecision, gives a little bit of a will they or won't they type movement, but an overall picture of an improving condition as you're high basing here against the 200-day moving average. I'd like to see a close here on the 200 against the 200, right above that 200, and then maybe punch up against that 35,000 level there in the Dow Jones, but certainly an improving condition. And when you look at that improving condition, obviously the Dow is going to be chock full of financial companies and some industrial companies and so on and so forth. You're looking at the industrial index here, same type of consolidation punching up there. You look at the financial space, which is, very Dow driven centric as well, getting above all your moving averages, and choppy session here today in finance, but you're above all your moving averages and an improving condition as well. And so when you're looking at some of these Dow components, including the healthcare situation, because, a lot of healthcare in the Dow as well, an improving condition. This has had multiple increases in support. You're talking about a bullish area of the market, and it's been a bullish area for tackle trading for the last couple of weeks or so. And so when you're coming back to the Dow here, very similar to the S&P, maybe underperforming the S&P just a hair, but a very similar perspective against the 200-day moving average, just a little bit more choppy session technically. The Russell 2000 is something to keep an eye on here. And it's quite frankly been something to keep an eye on for, as the market has been trying to find that double bottom. The Russell 2000 found that double bottom quite a while ago. You got to like the consolidation here against the resistance level. You see the resistance level right there, 2100. I don't need to look at it historically for tackle because they're very, very, very familiar with the importance of that 2100 level. You got to like the improving conditions over the course of the last month or so in the Russell 2000. And now you're looking at it right here, this consolidation. Look at that week of consolidation right there. A lot of defense, the moving averages catch up. And what's important about the consolidation as you're fighting up against a pretty important resistance level is it shifts the behavioral analysis to a certain extent. It really does. When you see the market playing defense, the way the market has been playing defense in the face of significant headlines over the course of the last week or so, and it's been able to shake off those headlines. Well, think about what's been driving this market for the last few months. Headline news, headline news, headline news, headline news. That's one of the reasons why the market couldn't find some degree of consistency. Well, now market's finding some degree of consistency. We're still seeing the headlines, but again, the market's shaking it off a little bit. And, you're looking at an index, the Russell 2000 here, that's looking to close above that 2100 level. You close above that 2100 level, there's levels historically between 2100 and 2200, but I think you're looking right here at that 200-day moving average. I think that's where you're looking at it for the next stopping zone in the Russell 2000 on this breakout. But again, let's see some confirmation first.
Love that analysis. And I'm going to bring up the webinar that we had last night on Iron Condors for beginners. The reason being, we trade the Iron Condor system here on the Russell 2000 as part of our community here for our team tackle. One of the strategies that we do is having a neutral system in your playbook so that when the markets give you, months and weeks of neutrality, that you're able to deploy a strategy such as the Iron Condor. So if you did not happen to catch that webinar last night, which was done by our wonderful coach Tyler, I am throwing that link in the chat over there on YouTube. So go ahead and make sure that you grab that. Really love this system, Matt. It's such, a unique system to just kind of have in your playbook. Again, when markets are not giving you the bulls are not playing, the bears are not playing, and you're just fighting between moving averages and resistance levels. This is one of the strategies that we use to still cash flow, right? Cash flow is king, as we talk about. So absolutely.
King, queen, and country. There's no doubt about that. Cash flow is the name of the game in all asset classes. And, you deal with real estate, and everybody knows the importance of cash flow in the real estate market. You buy an asset class to cash flow on it in real estate. And quite frankly, you shouldn't treat the stock market too differently than that. Most of the time you buy something long-term, you want to create some velocity of money on that. You want to create some cash flow to that. And with the Iron Condor systems, you don't even have to own anything, and you can create velocity of money and cash flow. And it's the beautiful thing about the Iron Condor system. It's obviously a system that is predicated on the Russell 2000. And, there's a lot of historical reasons that Tyler can talk about within the system, but it is on the Russell 2000. But the beautiful thing about the system is as you learn the system of the Iron Condor, you're also learning how to lob some amazing strategies like bull puts against bullish conditions, bear calls against bearish conditions. And so it's a great credit trading class as well. So definitely, I highly recommend Cash Flow Condors. Tyler does such a wonderful job. He did a wonderful job last night as well.
Absolutely. All right, let's continue on to commodities and see what's happening in that world.
Well, as all commodities goes, it starts with oil and it ends with gold right now. I don't think there's another commodity that we've been talking about as participants, but there's a lot to the commodity market. Oil has been extremely volatile recently. We don't need to really kind of debate that. The volatility continues here today. It's just I don't even want to say impressive, but volatility is declining just a little bit, and it's still rocking at 7.5% a day. So, on a day where oil goes from 107 to the low price of 98, you're like, oh, that's a volatile day, and I'm like, yeah, it ended in Y. That's it. Every day that ends in Y, oil's punching 7, 8, 9, 10% on a daily basis, and today's no different. It's tough as a trader to catch an edge here. There's no doubt about that. Outside of day trading, but the swing traders, they're looking at energy stocks. The cash flow traders are looking at energy stocks, and a little bit less volatility over there than within the actual crude oil space. I do think you got to be a little concerned here, though. What has been driving oil and really the volatility of oil, not oil in general. Oil in general was very bullish before even any tank started rolling in Ukraine a little over a month ago. But what's driving this increase in volatility is obviously the situation and the ongoing military conflict that is happening in Russia. And there's two news stories that we need to start tracking. And I started to talk about this a couple of weeks ago, talked about it a little bit more last week. But as this conflict in Ukraine continues to go on, the market's going to start looking at the future and the solutions in the future, and they'll start pricing it in. And whether or not it was whether or not it proves to be long term or not, the market's going to use it as an ongoing situation and start focusing on to the future. Well, a couple of the news stories is starting to happen. It looks like Russia is pulling back a little bit. They're starting to de-escalate the situation around Kyiv. The U.S. military has said this is a significant strategy change for the Russian military, as they are now starting to, pull back based on what they said over the weekend, that they're going to be focusing more on the southern and the eastern regions of Ukraine, and they're going to, some dude looking at this 10,000 miles away, that looks like somebody who's accepting an L to a certain extent. And when you look at this from a historical perspective, this is what de-escalation kind of looks like, and this is what big time superpowers have a tendency to do: declare victory and just walk home, whether it's the tail between the legs or not. We'll debate that down the road. But this does look like a de-escalationary situation happening, and we hope and we pray for some conflicts for these conflicts to be resolved, and ceasefire talks are ongoing here. So this is an ongoing situation, and hopefully these ceasefire talks continue. And it looks like the sanctions and all the pressure that the West is putting on Russia has certainly aided that. But who's been the most important player in all this? The Ukrainian people. I mean, they stood up, and it's been amazing to behold, though there's no doubt about that. But once again, de-escalating situation, and you're starting to see oil start to punch a little bit lower. You're starting to see a lower level of resistance. And so whereas you were tracking this over the course of the last month, even though it was extremely volatile, it was also extremely consistent from a technical perspective. You're starting to see a little bit of shift there. You're starting to see a little bit of shift there as you're starting to see that double top right there around that 115 level. You got to be looking at that now as a resistance level at 115. So the previous one was 113. Now you got to be looking at that at 115. That's a significant downgrade in where the previous resistance was. And that's kind of tracking the de-escalation over the course of the weekend coming into today. And, even with OPEC coming out today and basically reaffirming what they're going to be saying later this week, that they're going to maintain their slow, gradual increase of 400,000 barrels a day. There's nobody in the world that actually thinks they're going to hit that number of 400,000. They haven't been hitting it for months and months and months. That's not going to happen now, that especially with sanctions happening with with Russian energy. So that's going to be a difficult number to hit for OPEC. They know that. And so OPEC's not coming to save the day at all from an inflationary perspective. You're seeing some de-escalation that's happening in the Russian-Ukrainian military conflict. This is going to be a tough one to put together in the short term. I think we got to kind of see the volatility subside here in oil before, and a lot of it is due to the mixed messaging we're having from a behavioral and a fundamental perspective. One, Saudi Arabia saying we're not going to save the day. Russia pulling back a little bit, conflicting news stories from a bullish to a bearish perspective. So I think it's one of those ones where it's like wide range volatility today, a 7% range today. And what are we doing? We're just right there in the middle of the range. Makes sense to me based on the competing philosophies that we saw today.
Absolutely love that analysis. So definitely beware, if you are in the oil space, and like Matt said, energy is probably a better area for you to go and trade rather than trying to trade the commodity itself. Gold.
It's just tough. It's tough to catch a 7, 8, 9% movement in anything. Like if something wants to move that fast, it's like you're trying to run after a freight train. Sometimes it's tough to catch. So it's sometimes just to sit down and let it come back to you. When you're looking at gold here, you got a little bit of the same type of situation happening. And what's good for the market is not going to be good for gold here. And so, why gold was punching up and up and up was a little bit of the inflationary conversation, but obviously in my opinion, it had a lot more to do with the escalation of military conflict and geopolitical situations over the last month and a half, 2 months. And so you see a little bit of de-escalation there. You see a little bit of downward movement in price in oil. You can kind of see the same happening here on gold. And as the market improves, gold's going to take a little bit of a break, but I don't think that's a bad thing. I want to see gold. I want to see how gold handles 1900 here. I want to see how gold handles the 50-day moving average here. I want to see, the defensive nature of support come in, and let's see if we can get a better trade on gold in the short term. I think oil needs some time. I'm not sure gold needs as much time to give us some stabilization here. But again, I think both these two instruments probably need to take a little bit of a nap.
Nap time, kids. Time to go take a nap. Have some lunch and go take a nap. Let's get over to Bitcoin. What are we seeing there in that space?
The polar opposite of everything I've been saying here. Bitcoin's not taking a nap. Bitcoin's like I was taking a nap.
I've been napping.
I took a nap for 6 months, and I've been taking a nap for the last 2 months. I'm ready to rock and roll. I'm fresh. I'm ready. Let's rock and roll. Oil, you want to be a spoiled little child and throw temper tantrums every day. Gold, you want to take some time to figure it out. We're going to break out. We're going to run here. You got to like what you're seeing here. I would love a little consolidation, Em. I would love a little consolidation, but we've been talking about this. Once you broke up above that 45,000 level, once you broke up above the 200-day moving average, you're not going to pick the breakout time. I would love to get a better edge and a breakout on Wednesday at 10 o'clock my time, but simple reality is you don't get to pick that time frame. You got to like the breakout here. It's just a matter of how you play it. Slightly overextended situation. Maybe, I'm sure there was a lot of front running going on by a lot of people. Greg, that's all he ever wants to do is front run every breakout. And so I'm sure there was a lot of front running going on. For people that were front running the breakout, fantastic job. Congratulations. Now you track the overextended situation. For people that missed out on it, it's all secondary pattern stuff right now. It's all secondary pattern. You miss the breakout, you'd never chase. I don't care what the instrument is. You never chase. You miss the breakout, you be patient and you wait for that to come back to you. You throw the reel out there and you let it, you see if the fish wants to come bite. Sometimes it does, sometimes it doesn't. And maybe that's why I'm a terrible fisherman, Emily, because I'm just like, fish, if you do whatever you want to do. You do whatever you want to do. I fish like you come back to me. You come to me. Fish don't come to me a lot, but this one will. So I like a secondary pattern here. And what you're looking for in that secondary pattern is, let's see that consolidation resistance really start to form, or let's see that beautiful flag coming into that breakout channel right there at the 200-day moving average as well. Something that, you know, whenever you're looking at overextended situations, if you remember the step system, it goes breakout. Breakout's the first pattern, guys. That's the first pattern. Well, the problem here on Bitcoin, and again, the problem's a good problem, but the problem is it was overextended coming into that breakout. So when you're breaking out in the step system, you break out one, it drives up. It goes into pattern number two, which is the overextended consolidation. Then we see pattern number three, and pattern number three would be that bullish retracement traditionally, which would, I don't think you want to see that here, honestly. I don't think you want to see a standard retracement, because then you're coming underneath the previous breakout channel. You're coming underneath 45,000. I think what you're looking for here is a flag. I think you're looking at a high base. I think you're looking for a flag, some type of simple consolidation, retesting that former breakout channel to give us that confirmation, right? To give us that confirmation on that reversal being alive. Or you're looking at that strength pattern, that momentum strength pattern, where you high base, let that 90 EMA catch up and rock and roll here. So an indicator that you could track here to help understand timing on secondary patterns is when you do get overextended, that 90 EMA. If we are truly going to see a momentum condition here, that 90 EMA is going to play a role. It plays a role in everything on momentum. And so keep an eye on that nice little pink line right there. And it's got to be pink, because pink's always the 90 EMA. It's Mark's girlfriend. If it's not pink, it ain't the 90 EMA. I kid a little bit, but not really.
And I have to ask, we get the, we get the slowing momentum there. We break out. Are we going to 50?
60, 70, 80, 130. I don't care. I do think we would get a little bit higher price. But that's a great question when you're looking at this technically from just a pure technical perspective. Okay, just pure technical perspective. Let's come out a little bit more time frame here. You got some significant chop there at 50. There's no doubt. You got a lot of chop over here. You got chop there. You got chop here. You got chop there. You got chop between 50 and really kind of that 52 level. I do think that would be target number one. Yes, I do think that would be target number one. Target number two, though, I think you got to be looking at 55. I think you got to be looking at 55. But honestly, what I think you're looking at here is you're just walking up the stairs. I think you're going to be walking up the stairs. You're looking at 50, 55, 60, and then 65. And so you're just walking up the stairs, and we'll see that play out over time. But as of right now, slightly overextended, look for a secondary pattern.
Yeah, the way you were describing chop at 50, I don't know why all of a sudden the old McDonald's song came to my head, and because I was like, chop there, everywhere, chop, chop.
Chop here, chop there, chop here. It's like I was analyzing oil there for a second.
The things you're thinking about when you're analyzing stocks, it's crazy how that song just popped in my head. I like singing old McDonald's.
Emily, you've done this long enough now to realize where my crazy analogies come from. Sometimes you're analyzing a support bounce, like it's like an elephant jumping on a trampoline. Then 10 years later, it's like Marty's my best friend.
I see how this happens now, because now every time I say chop, I'm gonna want to sing the old McDonald's song. Chop here, chop there, everywhere, chop, chop.
It could be a very simple explanation here. You've been hanging out with me too long.
Yeah, I think
that might be it. That might be it as well.
That too. I'm starting to see things in the world. That is very scary.
This is awesome.
Moving along into news and earnings. We've got quite a few things to talk about here. We've got our Tackle 25 Academy Sports that's got earnings, Dave and Buster's, and Robinhood in the news. Which way you want to go first? You want to talk earnings?
Let's pop off some earnings very quickly. We only got two of them. Tackle 25, new addition to the Tackle 25 this year. Academy Sports and Outdoors here reporting earnings. Academy Sports, a little bit of a small mid cap stock for the Tackle 25. A lot of big, good, great cover call type stocks there. So if you are looking for a great list, the best list. The best list, Emily, the very, very best list for cover calls. It is the Tackle 25, and Academy Sports is a newcomer to the list, and I like their earnings report here today. First and foremost, whenever we do talk earnings, it's always about the raw numbers against the expectations, and then what does the company see from a guidance perspective. And so three very important things we're always talking about is EPS, revenue, and forward-looking guidance. Well, ASO produces all three of them here today. They came in at 161 against the expectation of 136, so a slight beat on EPS numbers. Revenue came in at 1.8 billion versus the 1.8 billion expectation. But when you're looking at net income, showed a good profitability above $100 million there. Revenue did go up 13.2% year over year. And then from a guidance perspective, they did increase EPS guidance while they maintained revenue guidance. And so a good little slight beat on guidance there. I wouldn't exactly call it the hat trick. You got to beat revenue to get the hat trick, but a pretty decent report from a raw numbers perspective. And now you're looking at this from a technical perspective, and you got to be looking at this as a little bit of a head and shoulders reversal pattern from a little bit of a longer time frame here. Left shoulder, head, right shoulder. I think that increase in support could be proved to be significant there as you kissed off the 50 yesterday, gap up, and now it's real simple here. It's a $40 price tag and it's a 200-day moving average. And it's just saying, you know what, if you want to break up and close, let's go. That's what it's saying. It's saying we want to go. We want to go above 40. And if we go above 40, we're going to 44. And if we go above 44, we're going to go to 46. That's what it's saying. And so let's see what Academy Sports can do. But good fundamental stock. If you're looking for a cash flow edge, Academy Sports coming off the lows looks fairly interesting above that 200-day moving average.
And some nice premiums too on those options.
Oh,
beautiful.
Beautiful premiums.
I was looking at the options chain going, I don't have on my list.
Emily's like, hold on. What can we get? What can we get, Matt?
I've
You
been
tell me,
hanging around
oh
the
my
market.
goodness, I can get 3% on a 35 delta. Let's go.
Yeah, I might even start boomeranging this little bad boy and
Well,
just
they could put to cover call action, huh? ASO, hey, listen, ASO fits that bill. I mean, ASO isn't one of those Intel type stocks. It's got the volatility edge to and the premiums necessary to do a boomerang style system on it. You know, there's a lot of material stocks that have that. We love doing that on like gold stocks, for example. But ASO certainly fits that bill as well. It's one of those growth components that's graduating into a fundamental darling for us. So we'll see if it can produce over time. Again, it's only been on the list for 3 months, and that 3 months has been a choppy 3 months in the market. But I like what ASO is doing here, and I like the reversal analysis. I like the head and shoulders, and I like the continuation above 40 here. And you know what? When you're looking at it technically, the strategy selection is always going to be up to the individual. Technically, it does look like you have an edge above 40.
Absolutely love that. What else we got on earnings today?
Next, we got Dave and Buster's. And what I wanted to talk about Dave and Buster's here is just a little overextended here. You're tracking up against some resistance levels to keep an eye on right there around that very significant whole number of 50. Look at that whole number of 50 playing a role back there. And so, what caught my eye today was as I was doing my earnings scanning, and I do even outside of earnings season, I do earnings scanning every day. And so I was doing my earnings scanning, and when I'm doing my earnings scanning, I always look at, for companies that are important to us, but I always look at things that kind of stand out to me a little bit technically too. Dave and Buster's stood out to me around that $50, but again, it might take a little bit of time to work that out because you are a little bit overextended, but just keep an eye on Dave and Buster's and how it works at 50. The earnings numbers itself, I think there's a little bit more hope here than, or maybe even hype than the actual raw numbers are producing. But Dave and Buster's came in at 52 cents versus the expectation of 61. Revenue came in a little bit on the light side, 343 million versus the 368 expectation. The importance here, though, for Dave and Buster's is the fact that that revenue, even though it did decline against the expectation, it was 193% increase against where they were last year. And Dave and Buster's is a long-term story of shut down, economies shut down, improving over time. And so sometimes when we've seen these stories of companies that were shut down in the pandemic, it's taken them a little bit of time to get back to where they were. And so there's a little bit of hope here that Dave and Buster's on the right path with that 193% increase in revenue year over year, but a little bit of concern on the raw numbers with an overextended situation coming into a major technical level of 50. Look for consolidation here. This isn't something I would be looking to chase, but again, technical edge above 50 if we get some consolidation.
All right. Thank you for that analysis. What else is in the news? I know you mentioned Tesla and Robinhood. What we got going on there?
Well, let's first start with Nielsen Holdings here, which is getting acquired. This is a big news story coming out. Nielsen's being acquired for $16 billion from a private equity firm. So just wanted to give that news on NLSN. Also in the news here today, I don't even know if it's news, so I don't even know if I want to report on it, but I saw some chatter regarding a stock split on Tesla. I'm like, are we really here again? Like, are we
Were we
really?
just here last year?
Like, weren't we here?
Yeah.
Yeah, we were here, right? Oh yeah, we were here. And so I was a little curious. It usually takes stocks a little bit of time to digest that type of news, but Tesla kind of does beat to its own drum until I realized this is most likely Elon just trying to ship news stories from somewhere else, because there's chatter. There's speculation that Tesla's looking at increasing shares to the marketplace so they can get to the point to offer a split. But at no point is there any time frame associated to this.
Yep.
And so this could be this year. It could be next year. It could be any year in the future.
Yep.
And so thank you, Elon, for providing us absolutely nothing.
Thank you for telling us what you're thinking in your mind.
Listen, I respect it. I sometimes my inner voice gets the best of me as well. So I'm
sitting here thinking, oh, McDonald's. So yeah, sometimes.
Yeah, but I mean, come on now. It's pretty obvious what they're doing, right? They just shut down production of their gigafactory in China due to COVID, and they're shifting the conversation. That's fine, Elon. You do Elon things.
All right. What else do we have in the news?
Next, we got one last story here to cover. Robinhood. We have not been talking about Robinhood in recent history, and there's a reason for that. IPO from last year, garbage. Is it still garbage though? That's the question. Is it still garbage? What's the saying? One man's garbage is another man's treasure.
Yep.
Well, does Robinhood have that ability? I'm not there yet. When Facebook had their famous IPO and it went from 38 down to 20, I kind of felt like that was just one of the most popular companies of all time going IPO, and the hype was just too much. I felt the pain was going to subside. It did. Eventually gave us an edge at support. And you're seeing a very similar technical read here on Robinhood, quite frankly. And, you got your double bottom there at a very, very significant whole number of $10. You see the double bottom, you see the triple bottom. Resistance isn't necessarily clean here, as you got one at 1370, and the most important one that it just reclaimed is right there at 15. And so I think it's one of those situations where it woke me up to Robinhood, but I'm not waking up in the mood to chase. Let's see what happens around 15. That 15 does stand out a little bit here, but the news is they're jumping as Robinhood announces 4 hours extended trading time, and they're looking at getting to the point where Robinhood has 24/7 hours of trading. And so it jumped on that news. Technically here, I think that's the thing that interests me. But at the end of the day, you got to be looking at 15. You got to be seeing this as a slightly overextended situation. And and certainly playing a role with all the memes out there as well. I mean, you've seen GameStop jump recently. AMC has been jumping recently. And so I kind of throw Robinhood a little bit into that as well. And so it could be getting a little bit of additional love from meme. What is this? Meme Mania 4.0? Like which version are we on? Like, I don't even know. I left that in 2020, so I don't even know what theme park they're at right now, but it does have a little bit to that. So we'll see how it navigates. But again, overextended. Maybe let's look at that 15 handle. That's really kind of the reversal. And when you look at this on a weekly chart, You can kind of see that consolidation. Look at the big downward movement of price. Look at the consolidation here. First test of the weekly 20 here. Let's see how it produces. So it did, with this news and with this price movement, it certainly did wake up a lot of traders to Robinhood. And now it's on our radar. Let's see how it tracks. This is the first bullish uptrend Robinhood has had in quite some time. And so I just kind of feel like, let's see that first support. Let's see that first support. You know what I mean?
Yeah. While I have you on IPO companies that IPO'd last year, take a look at Roblox. Tell me what you're seeing on that one.
Roblox has the short-term head and shoulders, and here's the thing in the market right now, and I look forward. I wasn't in the scouting report meeting on Friday, but I look forward to being in it this week because there's going to be a lot of reversal analysis. We've been saying that for weeks and weeks and weeks. And to me, it's going to be about separating the haves and the have-nots here because the market does carry a lot of trash along the way. So Roblox here, and don't misconstrue my words. I do not believe, Roblox is trash. I think Roblox has an opportunity here. I'm just saying, just in general, we're going to have to go through some reversals to make sure which ones are being carried by the market versus which ones are legitimate value opportunities. Roblox here is a growth story, not a value story. I like the head and shoulders short-term pattern, left shoulder, head, right shoulder, good consolidation. But that 50-day just slightly overhead here. I think you're looking for that 50-day to play a role first. We've seen too many stocks break back up above that 50. And so the ones that are underneath it, they're underperforming the price movement of the market right now. And you got to ask yourself why. Why is these stocks that are down 140 all the way to $40, why are they underperforming a market recovering against the all-time highs? You got to ask that question. And so I think we're looking at Roblox here saying it's most likely it's getting carried here. It's getting carried here. And the reason I say that is when you look at communication space, XLC double bottom, double top, break up above the 50-day moving average, and now getting back up above that 50-day moving average. That looks saucy to me when you're coming back to Roblox, kind of the overheads, not in this sector, obviously, but kind of a part of the same type of sector, underperforming that movement there. And so when you're looking at the market doing slightly better, when you're looking at the sector it's associated with doing slightly better, I think you got to have a feeling it's being carried a little bit. And if it's being carried, that's fine. If the market wants to rock bullish, a lot of things can be carried to a lot of high levels. But I'm talking about the percentage level over the course of the last week. We just haven't seen that. You got to see it. And the only way I think we're going to see it is if the combination of the weekly 9, which you're seeing here play a role, you're seeing there play a role, you're seeing there play a role as well. Look at that weekly 9. That's right around 53.5. You come back out to the daily chart and you see the daily 50, and that's right at about 55.5. And so you got that space there that it's kind of like, I was flying into Portland yesterday morning, and there was like these 4 layers of clouds, right? And you would come under one layer and then it's just another layer. And that's a big zone there. There's a lot of cloudy, dark clouds right there punching down. You got the weekly 9 right there. You got the daily 50 right there. And so there could be a technical reason why we're seeing a little bit of underperformance. Let's see it break back up above those moving averages. And then I do think we have a little bit of action. But once again, Roblox underperforming some of the broader market and some of the sector should give a little concern. I wouldn't be concerned with that underperformance if Roblox was at the highs. Roblox has been beat up though. And coming off the lows like this, there's too much opportunity there. And so if something's going to underperform, you just always got to ask yourself, is it a reason for that? Is that reason fundamental? Is that reason technical? Is that reason theme-based? And so the theme here would be communications, gaming, but now, comms is starting to improve a little bit. So it'll be interesting. But again, I just feel like it's being carried just a little. Need to see a little bit more price action here, and I say that on the company I like here. I like Roblox. Right? I don't like all the money my daughter spends at Roblox, but I do like it from a company perspective. That's
the reason why we're forced to like it, because
that's why we like it.
That we can be able to pay for those.
Exactly.
Some of the things we do because of our children and their spending habits.
Mm-hmm.
That's
Others
another.
we do because of us and our spending habits.
That should be a Queen's Court. We'll do a Queen's Court watch list on what your kids spend money on. That'll be another one.
Let's go identify everything our children spend money on so we can offset their ridiculous expense. Yes.
Absolutely. Well, we are going to transition over to Queen's Court here and talk about something that you alluded to here just a minute ago. Before we get to that, though, we did have yet another webinar last night. We had the Step System Mastermind group last night. So those of you guys who are pro members, Team Tackle, make sure that you do grab that recording if you missed it live yesterday. So grab that over there at tackletrading.com. And if you are watching this and you are new to our show here today, go ahead and give us a like and a share. Also, there is a link there in the chat where you can just grab the link and give us a trial. We'll give you 15 days on us. Check it out, see what we're all about. And then hopefully we can have you as part of the family. We love to grow our community here, Team Tackle. Those of you guys who have been members for a long time know what we're all about. So we'd love to add you to our family of Team Tackle. So go ahead and check that free trial out there as well. Queen's Court, I got a question for you, Matt.
Yeah.
And being that we are starting to sound alike and think alike now, this is very scary. We probably almost straight alike when it comes to picking stocks and sectors and stuff like that, right?
Yeah,
so
it's almost like I was one of your mentors, but
it's something like that. I don't know.
Almost.
We're still debating that. We're still debating that.
No. I'm not debating that. I've never debated that. Inside joke there, guys. Inside joke.
So obviously I know that if I was to quiz you and ask you, hey Matt, what do you think I'm lacking in my portfolio over the last few months? There will be a few sectors that you would probably name.
It wouldn't be finance, it wouldn't be energy, it wouldn't be materials, it wouldn't be tech, it wouldn't be those ones.
Yeah.
I would say maybe, because I know you, you're probably lacking a utility company.
Yeah,
they're too boring to you.
Yeah. They're still napping.
You maybe forced some healthcare on yourself, but it took some time. It took some time. What sector? What am I missing? Discretionary. You've probably been tickling and playing around with the volatility of it. Defensive sectors like healthcare, like we talked about, you probably added a little bit. Utilities, boring utilities, but they've never been your cup of tea.
Yeah.
Then again, I don't think utilities are very many traders' cup of tea. I would say the one that does stand out is an M. You kind of hinted towards it.
Yeah.
Okay, let me just put it like this, guys. As a behavioral analyst, when I'm talking about all the stocks in the news and Emily's like, hey man, I got one more for you. I'm like, okay, what is that? That's Roblox, kind of, I'm asking for a friend of a friend.
Yeah, I'm asking for a friend.
Like my sister was looking at it and, I kind of have a feeling Queen's Court is going to have a conversation on communications here.
Yeah. Hello. Netflix is in there. You know how long it's been settled?
It's been a while. It's been a while since anybody's been asking for comms.
Netflix. So let's talk about communications.
Okay.
So obviously, part of our daily routine is obviously to go through the different indexes. And of course, we have a very, huge deep dive on the sector analysis on Mondays when you're here. And one of the, areas that's really gotten beaten down has been communications, right? But like the markets, it's lagging, but it's found a double bottom over there at 63, right? And you can all visually see that. And then, over the last week or so, it started to regain those moving averages. We got the 9 back, we got the 20, and then yesterday, and then today, we opened up above
that 50. That 50 is important.
That looks enticing. That looks beautiful. That's got me going, ooh, okay. Now I'm starting to even look and, like I talked about Roblox, I'm looking in the different spaces. I'm looking at your Verizons. I'm looking at your Netflixes, your Facebooks. And I'm wondering, is it time? Is it time? Am I a little ahead of the game, or is it time to start throwing some of these puppies in a watch list and start looking at them? See if I want to go.
Comms is building an argument. Comms is building an argument here. So let's look at that argument as told over time. Okay.
Mhm.
So give me 1 second. Let me get FinViz. All right, here we go. All right, so let's look at that. Let's look at that story of communications over the last
Okay.
6 months. Okay. 6 months ago, or over the last 6 months, comms is down about 9%. It's the worst sector. And it's not close, by the way. It's the
Not
worst sector. Cyclical is the second worst. It's down half that, right?
mm,
It's not even a debate. Comms has been the worst sector over the last 6 months. And just to remind everybody, it was me and Frank's pick for best sector of 2022. We're most likely, come on, help us out here, guys. Help us out. We finished up 22% last year. We can do it again. We're just gonna have to be a little bit more robust this time to get that Volcker for me and Frankie. But comps has a chance here to grab some fires. So let's look at it. Down 9% over the last 6 months. Over the last 3 months, though, improving condition a little bit, down close about the same, about 9%. But as you can see, tech's may be performing a little bit worse than in over the last 3 months. Over the last 1 month, you see
it's like a
comps
horse race. It's
up
like a
here,
horse race almost, right? It's
right?
like
It is.
back.
We're rounding the corner. We're rounding the corner here. Communications, in the last month up 3%. And think about from a thematic perspective in the marketplace. The last 6 months, comms garbage. The last 3 months, comms is garbage. Last month, comms is only slightly worse than garbage. And I mean that in comparison to the rest of the sectors. I mean, utilities up 7%, basic materials up 6%, real estate up 6% in the last month. Here's comms only up about 3.75. And so an improving condition over the last week, though, comms jumps up to the fourth, fifth best sector in the market in the last week. And 1 day relative performance, comps near the top there. So obviously you're seeing a story in price performance that is an improving condition. Technically here, you also see an improving condition. We've had these choppy sessions where we did punch up in comps over the last 6 months. This was the one that really had an opportunity, this little kind of this downward pressure that started in during I know it was a world ago, but you guys remember Omicron? That started kind of right there, right? Or excuse me, I lied. That was Delta. This is Omicron. See, it's getting confusing.
Yeah,
It does
November,
get a little
Thanksgiving.
confusing.
Uh-huh.
So anyways, it had those opportunities, but look at the 50, look at the 50, look at the 50, look at the 50, look at that punch up. Boom, 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 boom. 50, gross, back down. And so now we're seeing this slow, methodical grind where it now punches up against a 50 after a double, triple, arguable a triple, but I would call it a double bottom here. Breaks back above that 50-day moving average, reclaims that $70. And if you guys will remember, there's about a month ago where I called this my bear pick of the week, and I said it was a great hedge against the volatility in the marketplace. Well, you're now reclaiming that very same level here. At the very level why I thought it was such a good short is now such a, maybe not the polar opposite of such a good short, because you have a different pattern going into it. But again, I do think it's an important situation for comps to break back up above 70, for it to break back up a bit against the 50-day moving average. And when you're looking at communications from an individual stock perspective, let me kind of bring this sector over here now. When you're looking at it comms from an individual stock perspective, Google's all well on its path to recover well before this conversation, and it was obviously leading the entire sector. Facebook just kind of being carried here, And so what I'm looking at here is, okay, so comms is starting to turn around. Are the stocks starting to turn around, and which one should we really kind of be looking at? Facebook's just Facebook. That's all I'm going to say on that. Disney's got an increase in support, kissing up against moving average. Keep an eye on that double bottom at 130. Comcast has a very constructive reversal that it's working out with the double bottom around 45. Verizon, garbage, like literally low base against an entire market that's improving. Verizon low base. No, thank you. No. Netflix, I think Netflix got to be looked at here. Choppy reversal, head and shoulders reversal in the short term, but it's got one of those conditions where that old resistance at 400, it's reclaiming that moving average there. So keep an eye on Netflix. AT&T looks like a nothing burger. T-Mobile about 130, maybe. A little bit of a descending triangle wedge on Charter Communication. Activision obviously got bought out. It's off the board. EA's fighting a V-shaped recovery here. Twitter looks very compelling here. Double bottom, triple bottom, quadruple bottom, reversal analysis, increase in support, and then reclaiming that $40, which was the old pivot point. That looks interesting. Match with a V-shaped recovery looks interesting. And so you go through the watch list. OMC looks really interesting off a choppy, volatile head and shoulders. Right shoulder, king's bed, breakout type pattern. Dish looks compelling in reversal analysis. And so, when you're looking at some of this here, you saw the improving condition on performance against sector as told over time. The technical condition is changing. And, I remember I wasn't in the scatter report meeting last week, but I was a couple weeks ago. And I'll tell you exactly what I said a week and a half ago in that scatter report meeting, because me and Frank were there and we were kind of debating things. And, me and Frank have a very similar technical read on most things. And both of us like, comms is garbage. It's garbage. It's garbage everywhere. It's garbage bull. It's garbage bear. It's garbage everywhere. You can't find any edge one way or the other. That's not necessarily the case any longer. You're starting to see some compelling evidence that in the volatility of Facebook's earnings reports and Netflix earnings report from last quarter seems to be subsiding. Both of them are punching up, but the one I'd keep an eye on if you're looking at one of those big dogs out of comms is definitely Netflix against 400 more than chasing whatever Facebook's doing. But I do think now you're seeing improving condition here, Emily. And, I think comms definitely has a chance, and there's a lot of compelling reversals here in communications. Roblox not listed here, obviously it's not in the actual S&P, but that's compelling as well. So yeah, I think it is still lagging the market, and the rankings at Tackle Trading also reflect that lagging the market. The S&P at 40 versus, and by the way, the S&P would be at 35 based on the price action we've seen this week. But communications at negative 45, an improving condition over the last few weeks for us. We were at negative 30. We've been inching that up to negative 45. So obviously an improving condition, but I think at this point, it's a matter of updating those watch lists in communications and get ready to fire when you see the trigger.
Absolutely love it. Thank you very much. So I'm glad that you're seeing what I'm seeing. That means we're seeing things the same way because we trade almost the same system. So it should be that way, right? When you're in the community, this is what it's all about, right? We have a routine, we do everything, systematically, right? So we should be able to see the same thing that everybody else is seeing together as a community. So,
well, and I love it so much, and because when you have a community like Tackle and you've been a part of it for a long time, and you know how the coaches go about things, you understand their language. It's almost like you got 1,000 set of eyes out there trying to find the opportunities in the market. And we find those needles in those haystacks all the time. And it's not because of any one coach or one individual. It's because of a community and the strength of having a trading tribe.
Absolutely. And that will be it for us today for the halftime report on a Tuesday, March 29th. Programming notes tonight at 7 p.m. Eastern. My lab, Team Dynasty Investors, we're going to be on at 7 o'clock. And guess what? We're going to continue this conversation on communication. So if you have not checked out our trading labs, go on over to our store tab on tackletrading.com and also check that out as well. Come on out and give us a view there. We've got 4 labs going on. Mine's on Mondays. I'm Tuesdays. Coach Greg is on Mondays with his fundamental focus. I'm still jealous about that logo, man.
Fundamental Society. Yeah, it's pretty good. I love it. I got to get it on a hoodie. I might not take that hoodie off. I'll just walk around. Just everybody look at me. Yep. Illuminati.
It's a beautiful thing that Christian did over there. So we've got Mondays, a lab on Mondays.
He did a thing.
Yeah, we got lab on Wednesdays and lab on Thursdays. So go ahead and check us out. And then we've got our coaches show at 8:30 p.m. Eastern as well tonight. So go ahead and put that on your calendar, set an alert, and we will see you on all things.